Good afternoon, everyone. Welcome to our, I think, fifth EUDR webinar. It's exciting, to be here again and to see that so many of you have registered. Once again, I'm here today with Elisabeth. Elisabeth and I are both sustainability researchers at Coolset and have been spending the last couple of months diving into EUDR and really, diving into every paragraph, diving into the practical elements. Mainly to understand it for our software environment that we're building for EUDR, and of course then also to help our customers that are working on it and to prepare these webinars where we try to take you on kind of a proper deep dive that's a healthy mix between theory and practicalities. So that's a bit of an introduction from us today. We have a busy schedule, so if we go to the next slide, we'll see that we have a lot to talk about today. So we have a brief summary of EUDR. I think at this point everyone knows what it's about, but just to get everyone on the same page again. Then we have a quick regulatory update, as we quite often get questions about what is happening in Brussels, specifically about EUDR in this context. Then we'll move on to the audit. What do auditors look for? How do they actually start looking for you? Because it's not that black and white. Then the question on when will you be audited will then go over to core documentation. What do you need to document in order to be compliant with EUDR? I think that's also the golden question. So I think that will bring some clarity. Then we'll move over to practical enforcement. We've taken some examples. For example, we know that some countries have already kind of started exploring the official channels they'll take, and then move over to non-compliance. So what does non-compliance look like? And what are the consequences of non-compliance? Last but not least, we'll kind of leave you with a tooltip on how to get started, and of course, have a Q&A session at the end. I also wrote a quick message that I'll put here in the chat. Everyone that has questions throughout, please put them in the Q&A or in the question section towards the bottom right of the screen, and then Elisabeth and I will get back to them at the end of the webinar. If we don't get back to them, that means we'll answer them over email, so feel free to ask away. So EUDR in a nutshell, what does it entail and what are we going to see the next couple of years? So a brief introduction, the EUDR is a regulation that forces deforestation-free proof from December 2025 onwards for the 7 kind of biggest EUDR-related commodities, or in that sense, the biggest deforestation-related commodities. These are cattle, soy, palm, wood, cacao, coffee, and rubber commodities, plus all derivative products. So if you are a company working directly or indirectly with these companies, either as primary raw materials or as refined materials, then you need to work with that. What does that, for example, mean? That if you're a car company and you're importing tires, those tires are made of rubber, and thus you also have to report on EUDR. It's applicable to all companies placing relevant products on the EU market or exporting from it, regardless of size or location in the supply chain. This is also a really important distinction, as from any size onwards, you have to comply with EUDR. Only under very kind of few circumstances can you be exempted. For example, if you're importing certain EUDR-related goods, only to use them as samples, for example. And then last but not least, you also require geolocation data and conclusive due diligence to prove no deforestation or forest degradation has happened post-2020. So for any product that you put on the market that has been made after 2020, you have to capture this in a due diligence statement. And that due diligence statement, or DDS, is quite simple. You just have to have some simple information, but then of course you do also need to do a lot more behind the scenes, like the risk assessment. So who does this apply to? On the one hand, you have the producers and the importers. These are companies placing relevant products on the EU market for the first time. They must run due diligence, submit a DDS, and publish an annual public report. The public report is quite simple, but it's more of a policy document, kind of explaining how you're running EUDR at your company. So who's responsible? What kind of documents are you uploading? What kind of process are you running to collect all the relevant documentation regarding the risk assessment, and how are you capturing that? There's multiple ways to roam, and this is essentially the way to capture that process. Then you have the manufacturers and the exporters. These are companies that manufacture in or export from or trade in the EU. So you must run due diligence, prepare your own due diligence statement, and also publish an annual public report. So very similar responsibilities to the producers. And then you have the downstream SMEs. These are the companies that have slightly less responsibilities, as are companies that buy, sell, or manufacture in the EU while being an SME. And they must retain and forward due diligence statements down in the supply chain, but they don't have to make their own. So they can kind of be the intermediaries in the market that ensure that there's due diligence statements on every product. And if you're not an SME, you still have to conduct your own due diligence and prepare a DDS. So here, a quick timeline. I think this is also quite clear, so I'm going to fly through it. On the 29th of June, 2023, the EUDR entered into force. What does that mean? It essentially just means that it was published in the EU's official journal. This is kind of the tradition or the rule that they have there. As soon as something is published in that journal, it becomes official, and that also means that it's then transposed into national law. Of course, it was then postponed on the 13th of December 2024. As some of you may remember, it was actually supposed to, EUDR was supposed to go live on the 30th of December 2024, and now it's postponed by a year. So now in a couple of months, on the 30th of December, we're going to start seeing a mandatory EUDR environment, whereby large and medium companies need to meet their compliance deadline. And then a half a year later, on the 30th of June 2026, we're going to see small and micro companies' compliance deadlines. So let's move on to the regulatory update. This is kind of just an update to give everyone a bit of an idea of where we stand today. And as you see here, what we're seeing is that the last status is that a review of the country risk benchmarking system has been rejected on July 9th. Just to give a bit of context, the country risk benchmarking system was essentially a classification of all countries in the world, and then they were classified into low, medium, and high risk. Only 4 countries were high risk: Belarus, Russia, China, and Myanmar. And these countries make up a very negligible amount of the total EUDR commodities. So already that was, by some kind of political parties, discussed. But then mainly they were saying, well, for the countries in Europe, for example, that are very low risk, or in their words, no risk, there should be a new category that's going to be implemented. Either way, this has now been kind of, they've found acceptance on the fact that this benchmarking system should be revisited. And now all the members of the European Parliament are back from summer recess, so we're expecting some more clarity quite soon, but nothing tangible just yet. Also, what we know is that the EPP, the European People's Party, is driving simplification, calling for lighter compliance burdens. So what might happen is that kind of this opening of the review might mean that there's a new category for companies, such as the no risk category, but that's still to be seen. For now, it looks like everything is moving ahead. Also, when we look at kind of the practical elements of of countries that are reporting, we're seeing that, for example, the Netherlands and Germany have already very clear structure of how they want to approach things. So moving on to the next part, which is the audit. This is where we start getting into more detail. So what we're seeing is that countries or companies will be audited on kind of several levels, and this also is triggered by various different moments. So those that have, for example, worked with CSRD or know that the audit is a very standardized approach. Every year you go through a standard audit, and then it's limited assurance. With EUDR, however, there's no kind of one-size-fits-all audit, because it happens either via a random or routine control, or it happens because someone raised substantiated concerns towards you, your company, or your order. We'll talk about substantiated concerns in a bit and explain what it means. And the third option is that your origins that you uploaded were flagged for deforestation. And that, of course, is kind of the whole point of EUDR. It can be that one moment you're not deforesting, and then because of the satellite imaging that you're doing and the risk assessments that you're doing, suddenly your value chain falls under that deforestation, and you have to take actions to correct that. What we see here on the right is an overview of kind of the 3 types of countries. So we have low risk, standard risk, and high risk. What we also see is that for low risk right now, 1% of operators and traders are checked routinely. For standard risk, that's 3%, and for high risk, that's 9%. So what do competent authorities actually check in audits? So on the one hand, they check the existence of a due diligence system covering every shipment. So here the keyword is system. It's not a due diligence statement. It's actually more than that, because companies with a lot of orders, for example, will have a very hard time doing everything in Excel, doing everything manually. So you need to have an advanced system to make sense of this. And if you don't, it also makes you more susceptible to letting things slip through the cracks. So they're going to look at your due diligence system to make sure that you have everything covered. They're also going to look at the presence of all required information, of course. So that includes geolocation, production dates, legality documents, and DDS references. So do you have all of that ready when they ask for the kind of the evidence for a due diligence statement? Then you have the evidence of the risk assessment and the mitigation before market placement. So, for example, if a company has done a risk assessment and sees, well, we are kind of at risk of putting indigenous people or displacing indigenous people, then you have to do mitigation before you can place it on the market, and they want to see that you have done these or taken these steps. Then they'll also look at consistency of data across documents, quantities, HS codes, and origins. And last but not least, they'll want to ensure that you have proper record keeping and retention for at least 5 years. So every document related to EUDR, including the DDSs, is placed in an archive within your company for at least 5 years. So what are some kind of weak versus strong findings? I think this is where it gets a bit more practical. So let's have a look here, for example, at geolocation data. So a weak finding would be if you have missing or only country level origin data. A strong finding is if you have a clear polygon/point file per plot, verifiable satellite maps. For those that haven't attended our previous webinars, this might sound like a lot. But yeah, feel free to also send us an email. We'd be happy to send you the specific webinar where we talk about the polygons and the points and whatnot, and we dive into more detail. Then we have the legality evidence. So here, a weak finding would be that you say you trust generic supplier assurances, which just essentially said, yes, it's all legal, it's fine. What you need to provide is copies of land titles, harvesting permits, and registry checks, so that also the regulators can see that you have followed protocol. Then you have the risk assessment, which is where you would just say, well, we have negligible risk because, we've always had a good relationship with our supplier, for example. That's not a negligible risk. You actually need to do kind of third-party verification. So you need to use, for example, indices or different kind of local NGOs that can tell you a bit more about what's happening on the ground. And then a strong finding would be that you have checklist-based assessments based on Article 10, which is the risk assessment, which includes, for example, using maps and indices of corruption. Fourth point here is the record keeping. So it's bad if you have old scattered files which are difficult or slow to retrieve. And it's good if you have a centralized archive which is indexed and retrievable in minutes. And then, of course, last but not least, we get to the due diligence statement. So a DDS submitted late or missing is, of course, quite bad under the EUDR, as this is ultimately what the regulator sees first. And it's good if you have a DDS submitted on time, but it's also cross-referenced in shipment documents. So when will you be audited? There's several triggers for the EUDR enforcement actions. By the way, really quickly, I'm seeing some questions come up in the chat. Please feel free to use the question section, as we can also use that to then kind of magnify a question on the screen during the Q&A at the end. Back to the slide. So we have the triggers for the EUDR enforcement actions. There are several moments when a government or when a national enforcement agency can decide to step in. So on the one hand, you have customs clearance where they step in when they see that the DDS is missing or incomplete at the import or export stage. It could also be during market placement when shipment placed on the EU market is placed despite unresolved risks. This will not happen so quickly upon market placement. It will happen more likely when, for example, there's ongoing monitoring. So if an NGO raises substantiated concern post-placement. So here we're seeing again that term substantiated concern, which is why we have a slide after this to explain it. But it could also be that during inspection, they find missing records or inconsistent documents. And last but not least, if they do find that you're not compliant in one way or another, they will do follow-up checks. And if they also discover that you have repeated non-compliance or ignored orders, they can shut you down or worse, which is what Elizabeth will talk about towards the end when we talk about fines. So let's have a look at substantiated concerns, which is also a kind of an article in itself in the EUDR. It's defined as duly reasoned claim with objective and verifiable evidence of non-compliance. The interesting here is that it can be filed by anyone. So it can be NGOs, communities, individuals, or even competitors. So anyone can go out and, see that, for example, there's deforestation happening. And this is interesting because it will be more than just the regulator looking at enforcement, but it might also be, for example, deforestation NGOs in Brazil looking at, okay, is this company contributing to deforestation? Then we can individually go to the European regulators and say, well, hey, we know this company is not importing deforestation-free products. Also, once a authority has been notified, they must assess all concerns promptly, impartially, and act if creditable. And the outcome has to be an investigation, including record requests, site visits, and interim measures. And also what's interesting is that the reporter receives feedback, and that's usually within 30 days, and your confidentiality is safeguarded. So for me, it's a really interesting kind of enforcement measure. It's very different from, for example, CSRD, where it's really just the auditor that goes through everything, and it's quite expensive and tedious process, whereas here it's much more community-driven, where everyone can give their input. And now I give the word to Elizabeth, who will talk about core documentation and then also take you more into detail about kind of the compliance part of EUDR.
Nice, thank you, Jasper. So yes, we saw how the audit will look like, the when and how, but let's deep dive into the more core elements of what a due diligence system looks like, and especially how this looks like for your audit preparation. So if you are working on the full scope of EUDR, meaning that you produce or import materials, you have to start with your geolocation data. This includes the country of production of all the elements of the products that you are sourcing or producing, along with the exact coordinates of these production plots and the date of production, which will be used to assess potential deforestation. Of course, there is this pressing discussion between the different industries of EUDR on how to get the geolocation data, and at the end, this comes down to having specific systems that can help you draw the plots of land or the points of land and create the JSON files out of them. And the responsibility, of course, lies with the person that is responsible for EUDR, but at the same time, the producers are the ones that can provide this geolocation data. So there needs to be collaboration with the producer and internally, of course, with the procurement team, since they are the ones in close contact with the suppliers and producers. Now, of course, collecting geolocation data is just one part of your documentation, but you should also do a lot of other things on the side. After geolocation data, you need to move on to proving deforestation degradation, free plots, and also proving legal compliance, meaning that you should make sure that your producers have the land rights to use and harvest the plot, you respect the human rights and labor rights, and for this you need to collect key documents and information from them directly, which could include document contracts, permits, and of course you should not only contain yourself to governmental data, but you should also include community agreements or, for example, free prior informed consent documents were relevant for indigenous people, for example. Then, apart from legality and deforestation, which are the core topics of EUDR, we also need to include country, business ethics, and supply chain risks, which need to happen for all your orders. And of course, you should make sure to rely on trusted and verifiable sources. So this means that every time you know where the information are coming from, and you can also make sure that you can verify this information yourself. Now, all these people that are involved in the process of the supply chain have different roles. And starting on the first operators, they are, as we said, the ones that have the full scope from mapping your lots and suppliers and products to continue with documentation and assessments. And then any non-EU intermediaries only have the responsibility of mapping their chain and suppliers in a way that they can give you the information of who provided the materials they gave you. So only the producers involved in your orders. So then we also have any other operators or traders that are involved in further upstream.
Sorry, very quickly. I'm seeing some comments that the sound is not very clear.
Really?
Let's see.
So,
There's always at least one issue with the
Is
sound.
it better now?
Let's see. We have a setup where both microphones should work simultaneously. No, not better.
Okay, so maybe it's.
Should be good.
Does this have to do?
It's I see one person now saying that it's okay. It's quite hard to see from our end what's going
Yeah.
wrong. We're gonna continue. If someone notices another issue, then we'll change the microphone setup.
So I will move on then, and let me know if something keeps not working properly. Yeah. Okay, let's. Is there any other comment before I move on?
No, but what we could also do, and sorry, just give us one second, and we'll change the microphone setup real quick. Which one is it?
Nice. You should do your own microphone. Okay, that's nice. So I hope you hear us better now, and sorry for this small delay. Please write in the comments if you cannot hear us still. Amazing. So nice. I am moving on now to downstream operators further saying that you are inside the EU. So there we are moving more towards process where I check the upstream due diligence statements and create my own, while SMEs keep their just have the role of the record keeper essentially. And of course, it is very important that you tie your EUDR responsibilities to your operations, meaning that you need to ensure that DDS information is related closely to contracts, invoices, transport records, and such. Now, the DDS statement, in a sense, is just the tip of the iceberg, but just to clarify, here is a list of who has to submit a due diligence statement and who not. So in that case, starting on with non-SMEs, the ones that are first in line, meaning I produce or import information, have to do the whole full evidence collection process and submit due diligence statements. While we see that downstream operators and traders all need to do a due diligence statement submission, but every downstream operator or trader uses upstream due diligence statement as the evidence and not the origins. Now, if you're an SME and you are the first in line, unfortunately, you're bared with the whole responsibility spectrum since there is no other information before you on EUDR. But any downstream operator or trader is able to avoid submitting due diligence statements, and they can just make sure that they keep a record of whom they buy from, where do they sell, and the due diligence statements they got from their suppliers. Now, when it comes to the practical submission of due diligence statements, we need to ensure that everybody understands that a due diligence statement is just a declaration of compliance and not an evidence bundle. So what does a due diligence statement include? Finally, it is your company information, product information, and either origins and country of production or upstream due diligence statements. Operators submit the DDSs with origins, of course. So the first operator submits the origins and gets the first due diligence statement number, while downstream operators create again new due diligence statements in the HS code area. They have to change the HS code, but they still don't have to do an origins declaration. And traders, a similar process are downstream as we said, but in this case you would add the same HS code. And of course, SMEs are not involved in this process if they are downstream or traders. And of course, you should make sure that you keep all these due diligence statement numbers along with their evidence archived and accessible for 5 years. Now that we saw a little bit more how the core documentation looks like, let's take some examples from specific competent authorities of different countries. So we see that almost all countries up to this point have added an appointed governmental body that will make sure they do EUDR enforcement. And one of the first steps of these authorities is to make sure that they have a process to control EUDR, of course, for their different countries. And here we see the example of Germany, who has appointed the Federal Office for Agriculture and Food. And essentially, they are some of the front runners. They have shared a lot of information online through presentations and other, like a website, a very thorough website and more. And here we have some insights that they have shared with the public. For example, they have said that every audited company will receive a letter, and then they will have 2 weeks to provide all the missing information for an audit. Also, they have mentioned that for the first phase, they will not apply strictly the fines, but they will focus more on guidance and correction. While they clearly mention that certificates are a supporting evidence, very helpful supporting evidence, but they are not enough to prove compliance. Lastly, they have mentioned that they're working with other competent authorities in order to create collaboration and cooperation between the countries so that they make these controls more easy to be conducted. And when it comes to the pressing question of will customs block my shipments, essentially, they mentioned that for the beginning, they will rarely literally block shipments in the area, but they will only do it in extraordinary cases, like, for example, trying to enter materials in the EU that are sanctioned from Belarus, for example. And in other cases, they might be able to allow the shipments to proceed, but I request this additional information to eliminate any potential issues. And this will make sure that we do not create trade disruption from 30th of December. Now, moving on to another example, also the Netherlands has appointed NVWA as the enforcement body for the Netherlands, and they recently had some trial inspection to importers and posted some insights. So they mention here that there is this misconception that data collection includes sufficient due diligence, which is not the case for EUDR, and they advise that we pay more attention to risk assessment and mitigation for this process. They highlight the support and help that digital tools can provide, but they also highlight that the company is the one that remains responsible, even if digital tools are being used. They interestingly also mention certificates, and they say exactly the same things, that it's not sufficient to prove compliance on their own. And lastly, they mentioned that evidence needs to be documented and traceable in a way that can be easily accessed, but many companies underestimate the depth of the assessments that they're going through for due diligence. Now, taking all this into consideration, there will always be cases of non-compliance. So let's briefly see what happens if you fail. So authorities, if they have a finding of non-compliance, they will order a corrective action and a deadline. And this corrective action could look like either requesting you to fix something like missing data, or collecting more information, but they could also block the product or withdraw the product that has already been sold, or finally donating or disposing the products. Apart from fixing the actual problem of an order, you also need to fix the shortcomings in your system that created this issue to happen in the first place. And if you don't comply, the authorities will enforce these actions themselves, usually in the worst way, I guess, possible. And the penalties are thorough and multiple, depending on what is it that triggered this non-compliance. And they could be like either fines up to 4% of your annual turnover, confiscation of non-compliance products along with their revenues from their sales, or temporary exclusion from public tenders and funding, or temporary prohibition from placing or exporting products. And lastly, you might lose the access to a simplified due diligence if you're sourcing from low-risk countries. Now, one of the most interesting penalties that has been mentioned is that member states will notify the EU Commission of all the cases of non-compliance, and they will publish a list of infringing companies which will include their names, judgment date, and the reason why they were flagged, along with what penalties given to them. And of course, this adds a lot of reputational risk on top of the financial and legal penalties. And frankly, reading this, it feels a little bit like a medieval town hall humiliation process. But on the bright side, it will be a very good tool for you to be able to recognize which suppliers are less trusted for you. Now, before we wrap up the session, I would like to leave you with some practical information on how you can get started on being audit ready today. So you should start with appointing one single person that is responsible for EUDR and audits, as this tends to be a topic that concerns different teams, and it could be very easy to lose the track of what needs to happen. But also you need to make sure that you have a system or template in place on how you're going to collect all your evidence per shipment. You also need to have a process in place to make sure that you submit your diligence statements before the commercial activity is completed. This might mean different things based on if you're importing or selling into the EU. And you also need to have a way to reference this information back to your operational system. At the same time, you should archive all your records for 5 years in one central searchable system. And lastly, we would really advise you to run some quick internal checks, maybe on a regular basis. This depends on your company, like it could be a monthly check on random past orders to see if all the files make sense and if everything is complete. Now, before we move on to the next steps, we have a small question for you, which is, have you appointed an EUDR compliance lead already in your company? And your options are yes, you might have already, or you're currently still deciding. Maybe you don't have it yet, or you don't have to comply with the EUDR, of course. So we see that most of our attendees, actually half and half, you either have already appointed or currently deciding, which makes sense because most of the companies are now starting to really take in seriously EUDR preparations. And if you're still deciding, it's okay, but really make sure that you take, that you really understand that the 30th of December is very, very close. And if you do not have a person, most probably information are scattered throughout your different teams. Now, before we leave you for today, we just have some slides on how Coolset tries to cut complexity through our platform. And we have summarized this process on 5 steps to success, as we call them, with the first step being that we really base EUDR compliance on your operational system. So we start by requiring all your purchase orders and sales orders, which are our first step in order to identify your responsibilities on every different order. What we do from there is that we can trigger due diligence requests to your suppliers. You can engage with end-tier suppliers and get all the data that you need in an intuitive, simplified, and non-legal way for your suppliers. Then, considering that you have done this process and that you have also connected your inbound to your outbound in an effective way that actually looks like how it is in the reality for you, we also have a section when we run risk assessments. So we do run a very comprehensive risk assessment that follows word by word the text of law, and is different, of course, based on the different responsibilities you might have for each order, as either cases you might be an importer and in other cases you could be a trader. Then, of course, there will always be cases that mitigation will be necessary and risks will be flagged. That is why we have created a customized first response mitigation surveys that open up based on each KPI that could trigger mitigation need. And then you can get a first fast fix, let's say, from your suppliers without you needing to touch the system at all. Then whenever you have sold or is all issues that you might have, you can auto-generate due diligence statements in traces without leaving the platform. And we also provide specific automations so that you sometimes do not even have to trigger the due diligence statements yourself if you don't want to. Now, last but not least, we're offering a platform that is audit ready and can provide you a full audit trail for all your orders, meaning that you can click on any random order in your system and see all the assessments that have been run for this one, all the data collection and the on how we assessed every single bit of information. And you can even invite your auditors into the platform in order to see for themselves how things have been done so far. Now, that's all about Coolset. And to now wrap up the session, I would like to let you know that you can receive a certificate for attending this webinar, and this will be in your inbox, and then you can email us if you attended later on the session and you would still like to receive the certificate. And last but not least, as we're at we launched last week our first version of our platform, and we're now on our early implementation stages. So we would really like to have one-to-one sessions with you. So if you are interested, you could book some 30 minutes for free advisory sessions with our research team. And during these sections, we could go through your requirements, understand exactly your case, and give you some of our information on what are your responsibilities, what could be your main challenges, and how to work through them. And yeah, we're interested to hear from you. So I have this question. So if you're interested and you would like to be contacted by us already, you can click yes on this poll, and we will make sure to contact you later on, of course. And yeah, for now, I think we're ready to move on to our Q&A session with Jasper.
Perfect. So I think the microphone should be working on my end again. Apologies again for the technical mix-up. I think every webinar there's at least one moment where we think now we finally figured everything out, and then something happens that we didn't anticipate, as it did today again. But thanks everyone also for flagging it and for thinking along with us. And we hope for the next couple of minutes that you can hear us clearly. We'll just have to manually jump between the microphones, but that's fine. So we have a lot of questions coming in, and I've had a look at them, and I think some of them are really, really good questions, quite complicated. As always, feel free to have a look at the questions that have been asked and to upvote any that you want to see answered as well, just so that we can prioritize a bit in case we cannot answer all of them in the remaining 7 minutes. Yeah, I'll start reading out a question here on top from Gunnar, and I'll give it to Elisabeth. Is there already a best practice for the transfer/passing on of upstream due diligence statements? For example, put the reference numbers on the invoices or other documents.
Yeah, so actually that's a very good question, and it's one of the most common things we have been discussing with companies these last couple of weeks. So essentially, there is not one single best practice. There are mentions in the FAQs that it might make sense that you add this reference number on the documents, on the commercial documents. If I could give my opinion, would be that invoices are already too late sometimes to pass on this information. So maybe you can do it at the packing list level, since if it's already an invoice, most probably the materials have already been transferred to the other person. However, the best way possible would be that your suppliers provide this to you before the materials already start from their facility. And I can also showcase how this could work for Coolset. So since every supplier gets one workspace of their own where they can manage their orders with you, they could even add this information on the platform for you to receive immediately. But also you can work around this and gathering this information and adding it later on to whatever system you're using. But yeah, I would say either packing list or find a way before this process starts, like the moving of materials. Yes, so this is part of the requirements of the UDR. So, as a downstream EU operator, if you are a non-SME, you are required to create a new due diligence statement, and the reason lies on the how heavy essentially your impact is on the market. That is why this is only referring to non-SMEs. And if you're an SME and you don't have that much of an impact on the global supply chain, then you do not have to do it. But if you are a non-SME, then you would have to create always, and it's part of the requirements. And the same applies for the traders that are non-SME and inside the EU.
Yes. Okay. So as I also just noticed, I was still muted on my laptop, but I think maybe now we have it really figured out. For next webinar, we'll connect both to one screen to one laptop again. Moving on from the technical issues, we have a couple of questions that have some nice upvotes. So I'll choose this one here from Henrik, which is 2 upvotes. Would a leather belt and a watch strap be in the scope of UDR?
Yeah, that's actually a very good question. So a leather belt essentially is, you need to check first of all the HS code of this leather belt or the watts, but for leather usually the finished products are not in scope. I think the finished good that is on leather side is the leather hides. So unless you are importing the leather hides in order to create the leather belt, then you don't have to do something on EUDR. So check if your outbound products are in the Annex 1 of the regulation. And the second is, in case you're importing, check if the product you're importing also is on Annex 1 of the regulation.
Perfect. Question here from Marietta that I can pick up. Do the filing by NGOs, etc., have to be substantiated with evidence of non-compliance, or is just a complaint enough? So to remind everyone about the section where we're talking about the audit itself, a lot of it falls back to kind of this substantiated concern, meaning that anyone can raise an issue and kind of flag it for companies reporting under EUDR. And the EUDR classifies or describes a substantiated concern as being something that's a duly reasoned claim based on objective and verifiable information. So that means that as soon as you raise a substantiated concern, be it an NGO or an individual, you need to provide objective and verifiable information. So you cannot just kind of try to throw anyone under the bus by saying that they may have been non-compliant. You need to provide that level of evidence there. I think we're going to answer 2 more questions, but looking at the time here, and I see one question from Joyce. Do you know how frequently are the SME classification thresholds going to be reviewed? Now the threshold is 2020, but the EU has indicated that it will be, but has the EU indicated that it will be reviewed?
Yes. So first of all, the threshold for your responsibilities is different from the threshold on if you are getting the 6-month extension. So when it comes to the 2020 threshold, this refers to if you're going to get this 6-month extension. So since this is just for the first 6 months of implementation, I wouldn't see any different changes. Now, when it comes to your responsibilities, let's say bucket that you fall under, this should always be taken from the financial year. So I understand that every time you're going to get audited, they will want to see proof that on that financial year you were qualifying as an SME based on the regulation. I hope this helps.
And then a last question from Kritika, which I find also very interesting. Does the EU define risk thresholds to define something as negligible or a non-negligible risk?
Yes. So essentially, there is not one single, let's say, assessment that can tell you if the risk is negligible or non-negligible. What the reason why I think the regulation does this is because there are various different realities in the different industries and companies. So it is up to interpretation. So what I could suggest is that when you say negligible, it should be that there was no single section of this checklist that raised any concern, even if this was a suspicion and not a concern. So that would be the approach I would suggest taking.
Perfect. And I think may have been the first webinar that we actually conclude on time. So that's really nice. Thanks for everyone for joining today. Once again, the questions that haven't been picked up live, be rest assured that we will get back to you over email, and we'll reach out to everyone that has expressed interest into scheduling a call with us. For now, thanks very much for joining. We will be hosting another EUDR webinar in 2 weeks on the Wednesday. So stay tuned and look out for us on LinkedIn. And we'll be posting it this week. For now, thanks everyone for joining, and you know where to find us if you have any follow-up questions. Thank you, and bye-bye.